I'm delighted to be joined by Kate Durian, Meese, contributing editor and non-resident fellow, Arab Gulf States Institute in Washington, D.C., but based here in Dubai, Bora Bariman, managing partner of the Hormuz Straits Partnership, and Shuaib Boutamin, energy advisor and CEO of Randall Consulting. Thanks so much for joining us, everybody. A lot going on in the markets, obviously. Bora, let me start with you and get your take on the last week or two since we last spoke to you. We've seen obviously this continued volatility on oil prices, being driven by uncertainty all round. Geopolitical developments have also been dynamic, haven't they? So what do you think is sort of driving this volatility mainly, and direction, if you like, for oil prices going forward, in your opinion?
Well, I was listening to the Turkish economy minister at this Antalya diplomacy forum last week, and he used a term I hadn't heard before. It's a nice acronym, VUCA. I don't know if you've seen that.
No.
VUCA standing for the situation we're in, characterized by high volatility of markets, um, uncertainty driven by the lack of information and precedent, the complexity of the international trade interdependency, uh, and the ambiguity of the intentions of especially the main player. And I think we're in this transition to a new world that uh, we don't quite see what it's going to look like. The uh, multilateral rules-based order was founded on, America as its main anchor. And I do believe there will be multilateral rules-based order persisting, but America won't be the anchor. And
I
we
mean,
have to look for other anchors.
yeah, I mean, just stay with you, Bora, just on that point. I mean, there's a few headlines today on our bulletin, but a lot of them indicating sort of not new alliances, but reinforcement of partnerships that were perhaps already there in the making. China taking a very big sort of stand in terms of, its meetings with people, its response to the US tariff situation so far, and, Saudi Arabia, again, Aramco, China cooperating on Baidu electric cars, etc. It seems that the rest of the world is sort of getting on with reinforcing its other alliances outside of the US without hesitation. Do you think that's going to be a
Well,
continuous trend, or once Trump's tariffs are clear, we're back to normal?
I think this is an irreversible trend in that there is investment coming out of China into the rest of the world.
Mm.
And the counter narrative from Washington is that uh, this investment is a threat to you, and this investment is going to have all types of political um, strings attached that are going to impinge on your security. Now, if we go back to the beginning of the Cold War, we knew that we had to align, we meaning the rest of the world outside of the United States with and Russia, with one or the other, and you'd be happy to align and attach your security to the United States in order to be part of the dollar-based world.
Mm.
And on top of that, you would be thrilled if they opened a Ford automobile plant on your territory back in the 50s or 60s, which they rarely would anywhere. But now we go forward 75 years, and the Chinese are announcing plants in Saudi. They've announced $1 billion investment in Turkey to build 150,000 BYDs per annum in Turkey. And there's rumors that the Chery brand that none of us heard about 2 years ago, but now that we see driving around, they've got showrooms opening up. The Chery brand is considering opening another 200,000 car uh, per annum plant in Turkey. A place like Turkey would be thrilled to receive that type of
Yeah.
investment, right?
And
So yes, we love our US dollars and we want access to it. So we were just praying, please don't sanction us, don't cut us off from our dollars. But at the same time, people need to work, right? So where's the
Yeah,
investment
yeah.
coming from?
Yeah, absolutely. And Elon Musk can't be too happy about all those new investments that he's certainly not going to be parking his Tesla factories anywhere soon, as long as he stays with Trump in that case. Kate, good morning. Welcome again. Let's talk a bit about oil specifically, oil direction. We've seen obviously prices take a hit the last week or two, slight recovery last week. It's kind of stabilizing a bit this week, one could argue. Have we, do you think, reached the bottom of prices? And again, where does that place OPEC given its plans going forward the next few weeks?
I don't think it's reached the bottom. I mean, we've seen it go lower. I don't know why it's up where it is at the moment. I think maybe now we're shifting to, we know that demand has been downgraded by the IEA, by the EIA, by OPEC. Not so much by OPEC, they're a bit more bullish, but I mean, the IEA is a downgrade by 300,000 barrels a day. That's quite a lot. EIA by 400,000 barrels a day compared to last month's forecast. So I think we're seeing that. The increase from the OPEC Plus isn't really going to make much difference. I mean, you don't flood the market with 400,000 barrels a day, and it's not even going to be 400,000 barrels a day if you calculate that plus the compensation cuts that are going to come from the non-compliers. So I think the market on the supply side is going to be rather balanced. You might have, you keep reading about it's going to slow down in the US. US shale is going to slow down. People talking about job cuts, etc. There was an article today in the FT. But I don't see, I mean, geopolitics, we haven't got any new geopolitical tensions that, we know Ukraine war is still going on. There's talk of ceasefire, which isn't a ceasefire. You've got the Houthi rebels being bombed and then saying, we're not going to stop. I mean, the Saudis bombed the Houthis for like 10 years and that didn't stop them. So now we've got that. I think the market sort of, takes that in its stride. Gaza is still going on, again, taking it in its stride. The talks with Iran, I mean, I didn't see any major announcement after the talks. What did they discuss in Rome? Agenda for future talks? I mean, it's not really that promising. So maybe, but even though everybody's saying it was positive, so that is not a geopolitical sort of tension that could increase prices. I mean, I don't think it's realistic to expect that you're going to have an agreement within a few weeks. And if you drag it out, by September, Russia's going to be president of the Security Council, and the snapback is no longer, but after October, you can't snap back sanctions. So, maybe it's dragging feet. It took years to come to the GCPOA, so we don't know what the red lines are. We don't know who's, So I think there's so many factors. I mean, as I said earlier when we were talking, my neck hurts because you're sort of, you keep looking to see what's going on tariffs, on, interest rates and all of that. So
all over the place.
Difficult.
Yeah, absolutely. And the Iran, I suppose the Iran talks with the US, as you said, some progress, some positivity being cited this week in the meetings in Oman. But again, who knows? Who knows what's going to happen? And all those geopolitical factors have been factored into oil prices for months, if not years. So as you said, that's not really doesn't seem to be swinging the dial. Shoaib, good morning. I mean, one thing Kate mentioned was that, well, when OPEC adds these extra volumes it's planning to in May and April and May and into June even, it might not make a huge difference because of the compensation cuts that some of the members are meant to be implementing. But again, some skepticism on whether those members like Kazakhstan, like Iraq, are going to be cutting back as they should be. Where are we at, do you think, within the group on that?
Good morning, Diala. Good morning, Bora and Kate. I think that the OPEC Plus was facing two big challenges. So the biggest one of them is the internal challenge, which is that to collaborate together all the members to, let's say, to be compliant, let's say, to fit to the compliance of all members. We have seen how many members in the last few months have been really not really compliant and to their commitment. So we remember how Kazakhstan, for example, I think in February, exceeded its quota by 300,000 barrels of oil per day, and several times happened with Iraq, I think, with Russia and other members. So I think the OPEC Plus has to solve this big internal problem, the problem of compliance. It's useless to keep, let's say, announcing that you are cutting oil 5.8 theoretically in the papers, but the members, some members are not really compliant. So I think they have to solve this issue. And I strongly believe when oil prices drop below $70, $68, everybody will try to comply. Why? Because when prices go 65,
We're there now, but we're there now.
exactly. So why? Because if they don't comply, let's say that price, if they add more volumes to the market, they have nothing to gain. They will lose because the price is already down, and they really complicate the situation. So the best for them, I think the scenario for them, the OPEC members, is to comply. They have no choice, because we are in the volatility market of uncertainty, prices 65, 66, $67. I think this is a big issue for the OPEC Plus members. So they have to be, at least they have to solve this internal problem. The other challenge, which is external issue, is to control the non-OPEC rising production. And I think this is something good at the moment, because when prices are 75, let's say 65, $67, the shale drillers in the US will get not really priced out of profitability, let's say. They don't get too much gain. They don't have much profitability. And I think this is really helping the OPEC Plus members to get market share in that time. So let me remind you that the United States production now is like 13.5 billion barrels per day, and it's in stagnation at the moment since a year. And I think that prices below $65 or below 70, I think will really let's halt their rising production, similar to the other countries like Argentina, Brazil, and other members. And I think the time we can see what will happen with this big issue, I think it's rising at the moment, is the impact of the tariffs on the global trade.
Yeah, absolutely. And maybe that'll be clarified the next month or two, one way or another. Bora, I mean, oil is cheap today, isn't it? It's going down, but it was already relatively cheap compared to other, consumer goods from a sort of inflationary point of view. So oil is a bargain. Are we seeing many indications that lower price, and again, I mean, Shoaib mentioned that, it's really, people are saying it could have been Saudi's policy now to continue with these additions of volumes simply to, basically to get the cut compensation moves in order, and also to put non-OPEC supply maybe a slightly bit more out of business. But again, I mean, looking at the price and where that's going, is that triggering? Do you think could we see prices go to a certain level where they will trigger demand, for example, from the likes of China to stock up in inventories, etc.? Have we seen any indication of that so far? China taking advantage of lower prices all around, and we've seen Russian Urals drop below the $60 price cap, etc. What's that doing for Indian and Chinese demand, for example?
Well, from my perspective, a lot of this consideration is dependent on our view of the interest rates in the U.S., because cheaper rates could help the global economy. However, a weaker dollar, then that also has a negative impact on oil price. But overall, I do think the world likes lower rates, and
well, Donald Trump wants those, but he's not getting them from the Fed yet, is he?
I think he's playing a game of chicken. He's creating that tariff inflation, and he's saying it depresses the economy. This tariff inflation depresses the economy. So you have a sort of stagflation effect, right? You're increasing prices, you're decreasing trade. what's the Fed gonna do? Is it gonna focus on the Trump-driven price increase, or is it gonna do something for the pain in the economy? And I think the markets are betting that the Fed will buckle, because this is why the dollar is weakening. I think that's that's the view of the market, and the alternatives to the dollar are at record highs. You
Yeah.
know, gold is up at $3,400 an ounce, and it's a very, as we said, this VUCA situation, very complex, very
But I mean,
volatile,
the
a lot
Fed
of
may have to,
uncertainty.
the Fed may have to buckle if you believe that the US is heading towards a recession now. I mean, is there a sentiment that we are going to see that now, Bora? I mean, certainly much more than a few months ago. Last year, everyone was calling it; it never happened. Would you be, if you're a betting man, predict that we will have at least by definition a recession in the US in 2025?
I think that's what Trump is trying to achieve somehow. Clearly, he wants to break with old habits. He wants to put in the pain now. I mean, if you don't have the pain now, when are you going to have it? Because the election cycle will start up again next year. All of this, these announcements about Doge and disrupting the way the federal government works, it's got to have a recessionary impact, and that's reflected in the stock prices, right? That's why they've been going down. They continue to go down. I think of the top 10 falls in the Nasdaq and the Dow in history, I think 4 of them have been in the past couple couple months, since Trump's been opening his mouth, right, on trade policy. So
Yeah,
I
I mean, a
definitely
lot of
see
people attributing
that
the
coming
stock
down.
fall to that, but also, profit taking. Those stocks have been going up and up, haven't they, for a year or two? Thanks, Bora. Yeah, I mean, again, dichotomies there and contradictions, weak US dollar and what Trump wants to do also with interest rates. Kate, let's talk a bit about the GCC economies a little bit, because they're obviously, they've got their budgets set. Countries like Saudi have higher prices to target. Obviously, they've got bigger spending plans. How would you sort of say these GCC economies will fare going forward if we take the assumption that the oil prices are not going to go back up to 70? We're in this new range, if not lower. And what do you think the sentiment will be here in the economies?
I mean, it's not ideal, is it? I mean, countries like Saudi Arabia, they can afford to run a deficit, maybe not forever, but I mean, they can afford to run a budget deficit, they can borrow. I think the problem that is being faced by Saudi Arabia particularly is attracting foreign direct investment, and that's been slower than they expected. And we are seeing, all these mega projects are slowing down. Some of them are being, are shrinking from their original models. But again, if you talk to Saudi officials, they say, well, these are long-term projects, we're talking 10, 20 years from now. We're not talking today, NEOM isn't going to be built tomorrow. So I think Saudi Arabia won't hurt so much. You've got to look at the other economies, the Omanis, even though Oman is doing quite well considering. Bahrain, Kuwait, which now has passed a law that will allow them, to borrow. So that's something new, and it tells you what state they're in. So I think it's sort of mixed bag. It's not, everybody's not equal. I think we're seeing here in the UAE, we're seeing enough growth. But again, the biggest risk, I think, to the region is not so much the oil price. It's the geopolitical risk in the event that something really major happens between Israel and Iran, or US and Iran, or Israel, US and Iran. Because you can imagine flight of capital, you can imagine the impacts on, the sense that this is actually a safe place to do business in. So I think that is probably a bigger risk at the moment, because, we've managed these kinds of oil prices before. The market has been quite strong, in the first quarter, if you look at all the so it's not yet the end of the world, but I think it's the slowdown, the potential slowdown the global economy, maybe not recession, but at least a slowdown, like we've seen before. And they may have to sort of tweak their production policies because they've given themselves that option. And I think as we head into the sort of, the weaker quarters, okay, second half,
Yeah.
second quarter, maybe not so much, but beyond that, maybe they will have to sort of hold back. But again, it's, when they had their big bust up a couple of years ago, it was because Russia did not agree with the timing of a production cut because they thought it would give more share to the US producers. That's no longer the case. So I think it gives them a bit more leeway, but we just have to wait and see.
Thanks, Kate. Shoaib, I mean, talking about Russia within OPEC Plus, again, it's conducting a war for the last 3 years plus, and has just gone with the flow and been allowed to do really what it wants to do within the caps and within obviously under sanctions as well. Going forward, I mean, again, we don't really see a realistic ceasefire in place, but would you say that the Russia equation within OPEC Plus will remain? Is that still working for countries like Saudi Arabia? Where do you see this as the group's focus going forward in that sense? And if we see a ceasefire between Ukraine and Russia, could that change the formula within OPEC Plus?
Yeah, thank you very much for this question. I think what the US at the moment is trying to do is to balance the offer and demand in the global market. When prices, we have to highlight something very important. When prices drop below 70, let's say 65, $64, Russia could really supply more oil to the market because it's sealing the sanctions on $60. So when we approach to $60 to the sanction point, so that will allow Russia to supply more, offer more oil to the market. And I think offering more oil to the market will participate to oversupply the global oil market supply to the market. And I think this will really impact the offer and demand. So at this point, I think Russia, the US administration at the moment is trying to make a deal, but that deal, I think, all the time, the United States is using its card. Why? United States is the largest producer of oil in the world. So it means 13.5 million barrels of oil. It's producing 13.5, and it's importing 6.5 to 7 million barrels of oil per day. So the US is trying to balance. The US want to import oil with a cheap price, but at the same time, the US, 2/3 of its production is coming from locally, and 64 from the shale oil. And we know how the break-even of production of shale from oil, barrel from oil is a little bit expensive. So the US now is trying to balance the production and the imports, but controlling, keeping an eye on what's happening between Ukraine and Russia, and keeping an open eye with the negotiating with Iran, and also maybe another eye on what's happening in Venezuela. I think these are the main cards for the US at the moment, is controlling everywhere in the world and trying to balance. So if we talk about the deal, let's say a peace deal between Russia and Ukraine, I think the United States will not really allow too much, will not give too much space for Russia to supply more natural gas to the European Union, because the United States took that market share after the war in Ukraine.
Yeah.
So I think if it will ease those regulations, could be eased for oil, but not for natural gas.
Yeah, I mean, well, you mentioned natural gas. I mean, Bora, let me go to you because I wanted to talk about that. We've seen, obviously, Europe take more LNG from the US during the Russia-Ukraine war. But we saw China last week cancel LNG purchases from the US. I mean, for political reasons, for price reasons, you could argue. How significant do you think that's going to be, again, sort of Asian demand for US LNG as we see these new sort of economic blocks and partnerships re-strengthen? Is that a card, do you think, that a lot of countries will play in this tariff scenario? And is there that, I mean, you've got Qatari gas available, you've got Algerian gas available. Does the world need US LNG?
Exactly right. I think in its bilateral negotiations with the Japanese or the Vietnamese or the Americans, they want to threaten the tariff card, right? but the other side has the threat as well. They say, well, you're sending us beef, you're sending us soybeans. We won't buy from America, we'll buy from Brazil. And the same goes for LNG. It's not the optimal configuration of the world to be dependent on American LNG. There are other sources that are more natural, but the geopolitics interrupts the flow. For Europe, it's Russian gas. That's the cheapest, and that's the source that would be the best for their industrial base. But they've been cut off from that. Now you have the ADNOC just announcing that they've agreed to supply LNG into the Chinese market. That's what China can do, right? And what's America going to do about that? Maybe we can have conspiracy theories about disrupting the flow out of the Straits of Hormuz, but hopefully we won't go there, right?
Yeah.
Trade is a two-way street for sure, and trade is governed by multilateralism, and most of the world is going toward free trade zones and multilateral trading blocks. And
I mean, the
I
US at the
definitely
end of the
see,
day is quite self-sufficient. So if it continues on
yes,
this track, it'll be fine. Maybe other countries
yeah,
won't, but that
America will
seems
be fine. And that's what
absolutely
my main point is multilateralism will survive. It just
without
won't
America.
include America, and Israel won't be part of that. And the rest of the world, they'll
Okay.
carry on because they need each other. They
Yeah.
need the
Well, it makes
trade.
economic sense. It makes economic sense, if
Exactly.
nothing else. Thanks, Bora. There's our survey question. What is mostly driving current oil price volatility? Of course, everything is, but what is mostly impacting that as we speak? Is it geopolitics? Is it inventories, which have been arguably getting a bit tighter and a bit more supportive, or is it this tariff uncertainty and consequent GDP outlook? Kate, I wanted to get your opinion on the recent visit by Saudi to Iran that took place over the weekend, I believe, or at the tail end of last week. We've had a few comments on that. I wanted to ask you what you think the incentive there is, and the timing of it is kind of interesting. As these
you bet.
Iranian
Yeah.
US meetings happen as well.
Well, you bet. Yeah, I think, if you look at when the GCPOA was actually agreed, the Gulf states were against it because they thought that was giving Iran a free hand to sort of go ahead and enrich and have a nuclear program. But now things have changed, the relationship has changed, because of Chinese mediation. And I think what they're probably trying to say to the Iranians is, hey guys, you better make a deal. And give them guarantees like, we will not allow, if in the event that the talks don't fail, and, we would never allow overflights, in our airspace to come and attack you. I think it's sort of a bit of reassurance and a bit of maybe a few promises of, support, because the economy is not doing too well, right? The rial is slumping, the Iranian rial is slumping, the economy is not doing well. They have been weakened because of their proxies being weakened, Hezbollah, Hamas, now the Houthis are getting bombed. So I think it's partly because they really don't want to see an attack on Iran that could, forget about not just the political diplomatic fallout, the actual nuclear fallout. The few weeks ago, Qatar said that they had conducted this simulation to see what would happen to Gulf waters in the event of a nuclear, nuclear fallout. So, I mean, it's pretty risky. And as I said before, the risk of flight capital, the risk of this area not being considered a safe haven for investment, for people to come live. I mean, from being in Dubai, how many foreigners we have coming, expats setting up home here, and all the construction that's going on. So I think it's,
that's obviously, there's a lot at risk. And I mean, there's only one country that is outwardly saying it wants to attack Iran, if you like, but many people dismissing that's going to happen without US support. And the US certainly doesn't want that to happen for
he wants
reasons.
a deal. He wants a deal, but at the same time, he
deal.
has said, we will join the Israelis if there's an attack, if they want to. So, but I think he did snub Netanyahu. So at least, I think the desire to make a deal is stronger than the desire to make, to strike Iran. But again, you just don't know how things are going to go.
Okay, well, thank you, Kate, for that. You just don't know. That seems to be our conclusion these days. What's happening? That's why gold's at $3,400 probably.
Oh.
There's our unsurprising result. Tariff uncertainty, GDP outlook, they all interlink, obviously. Kate, thank you so much. Shoaib, thank you for joining us this morning. And Bora. All the best, everyone, and have a good week ahead.
Thank you very much.
Thank you.
Thank you. Have a lovely day.